All right, good afternoon. Hope you had a great trading day. My name is Jeff Yady, founder of the algorithms for TM Signals and the trading signals here. Great to have you aboard and excited to talk about some of the things that we have in store here today. So let's go take a look at today's roadmap, so to speak here. But, what is signals trading? Okay, what is signals trading? Let's kind of, flush that out. What some of the pitfalls of trading signals are. The number one rule when it comes to trading signals, buy or sell signals. And then we'll go take a look at TM Signals algorithms and how the ATR applies to them, or the average true range. And then we'll go take a look at Stoke Triggers, a new signal that will be coming into TM Signals. And then at the end, I'm going to make you an offer. I think there's some really cool stuff going on here with TM Signals, some really cool ways to profit. And so we'll give you a discounted offer here to TM Signals when it's all said and done. So let's start here with signals trading. What the heck is it? Signals trading is generally algorithmic, or a recipe. All right, ABC 1, 2, 3. Red light, green light. If X, Y, and Z happen, then we'll do 1, 2, and 3. All right. A lot of signals trading revolves around technical signals in the market. Technical signals are just mathematical ways to represent the price action in a stock. And so a lot of signals are based on that. Some of it can get really complex. Some of it can be really simple. I always prefer the simple, but, signals trading, the nice thing about it, it tends to be consistent in terms of what the entry signals are. In fact, most signals trading, the entry signals are all based on something very, very similar. Okay. Now, one of the positives of signal trading is it's supposed to be emotionless, meaning there's not a human influence. From a trader standpoint, you don't have to look at it and say, well, do I like that or not? Right? No, it's there, it goes, and, let's go. The other thing that signals trading needs to be is without reason, meaning you get a signal on Apple. Well, the last thing you can do is say, well, I don't like Apple because, Tim Cook said this in a tweet 3 months ago. Those types of reasons are what people who trade signals are looking to get rid of, because there's a multitude of that noise out there in the market, and eventually it gets overwhelming. Okay. But for me, signals trading is about finding predictable setups. And the key to trading success is to find more predictable setups rather than trying to predict the next direction of everything. Right? A lot of traders, what are they doing? They're pulling up Apple and they're saying, well, where's Apple going to go today? Where's Apple going to go tomorrow? What's it going to do? And let's face it, a lot of that is very random. But signals trading is looking for predictable setups. Setups that, hey, you know what? In the past, when we've seen this price action, we've seen action go higher, knowing that, yes, anything can happen, but the odds are a little bit more in our favor. Now, whether we make it complex, whether we make it simple, there are some real pitfalls when it comes to making money using signals. Now, whenever I hear this word pitfall, reminds me of the old Atari game, right? And, for those of you that played it, 20, 30 years ago now, you got this little guy and he had to jump over a snake and, had to cross the swing over the alligators. And if you didn't hit everything just perfectly, you know what? You were dead. And I remember playing it as a kid and, all right, restart because, I mistimed my jump or mistimed my jumping off of the swing. And trading with signals can feel almost as difficult, almost as, man, one little mistake and I'm dead, right? But there are a couple real pitfalls when using signals. To me, here's some of the bigger ones. Number one, the slippage of spotting. Okay, what do I mean by that? Well, we get a signal, right? You're trading a stock, you see Apple, and boom, there you get a buy signal. Okay, great. By the time you get in front of your computer, by the time you look at how you want to apply that signal, whether with stock, option, spread, whatever it be, you know what? The price action may have changed. One of the biggest things that happens is there's a signal right away, first thing in the morning. Boom, there it is. You're an option trader. The signal comes in, and wait a minute, your options aren't open. Great, you have your signal. Stock's trading around for 3 minutes, 4 minutes, 5 minutes. By the time your options open up, the stock's made, a big portion of its move. Can work that way on the exit side too. And so there's a slippage element in terms of just spotting it and saying, oh, okay, here's the signal. Now can I actually apply money and react? Another pitfall that comes in, and I'm sure this has happened to almost every trader out there, but they start following some signals and they say, man, these have been really working. Then they go and get in. And you go and get in, and it's the first one you get in, it doesn't work. Oh, gee. And so what do? You wait, you watch the next one. Oh, magically the next one works. And you watch the next one, and magically that one works. So you say, I'll try it again. And you go get into that one, and oops, it doesn't work. Right? That's a common experience when it comes to trading signals. I'm going to pick and choose. They evaluate the signals over the course of a month or two and how they do, and overall they work, but then they kind of pick and choose in, and, inevitably we pick the ones that go the other way. To me, the biggest pitfall when using signals are human judgments, right? The whole point of using signals and technicals and mathematics here is to take those human judgments away, because we as humans are emotional beings. We don't necessarily even know everything that is, being put into making a decision. The biases that we may have, the emotions, what happened last night, was it a good day yesterday or a bad day yesterday? Are we grumpy? Are we happy? And sometimes, traders, when they're a little more happy, they, overplay their hand, or if they're grumpy, they overplay their hand. But human judgments really kind of come into play here and can really hurt any kind of signals trading. The fourth thing here is exits. Most signals trading out there doesn't have exits. Just flat out does. It says, hey, buy. Hey, buy. This stock's going to go up. This stock's going to go down. And just sends out this kind of, hey, you know what, here's a point. And a lot of traders, they try to create their own signals, and, they can go find entry points, and they nail the entry points. But then there's just exits, right? So inevitably they set rules like, well, if I'm up 50%, I'm just going to take it. And not that that's bad, but it's pretty arbitrary. And what are they doing? They're now looking and saying, oh, man, if I would have held that one, or, man, if I would have gotten out of this one sooner. All the hindsight analysis really comes in because there's not a solid exit strategy here to the signal. And then the last thing is trade evaluation and news, right? You get in here, you get in on a stock because of a signal, and, you haven't followed the news on it for a long time. You've never even pulled up the news feed on that stock. Now you're in it. Now what are you doing? Now you're pulling up the news. You're in GM, so now you're pulling up all GM's news. You're pulling up Ford's news. You're pulling up Toyota's news, Ferrari's news. You're looking at, all of a sudden now you're driving by down the road. You see a auto dealership, and you're looking in there going, I wonder if they have more GM cars or Ford cars. All that starts to process in your own mind. Things you never evaluated before, and things you never even cared about before. Now you're in the trade, start coming into play, and they can kind of curl back into this human judgment element and make it so that it's a little more difficult to follow on with the signal. Now, when trading signals, there's several rules. But for me, the number one rule when using trading signals comes down to using the average true range. Okay? And the rule is very simple. And I'll show you the average true range here. But the rule is this. the average true range, when trading trend signals, the stock needs to be trading outside of its average true range. When trading bounce signals, the stock needs to be trading inside of its average true range. What's that mean? Well, let's go take a look. Let's let me get rid of these slides here, and let's come in and let's just pull up some charts, and let's just take Apple for kicks and giggles, and we'll just pull up the chart on Apple. Okay. Now, Apple goes through periods of trend and rest, right? Here we go. Apple's trending, and then it rests. And then it has 2 up days, and it rests. And then it trends, then it rests. Then it pulls back and trends and rests, right? Stocks go on these. And no matter what you're trading or what signal you're trading, most signals revolve around trading a trend or trading a consolidation or a range. A lot of day trade signals, they're not looking for a trend. They're looking to play some of the oscillation. So, some of the oscillation here in Apple between 140 and 144, day traders are trying to, I'll buy at 140, I'll sell at 142. Okay, it gets to 144, I'll sell it there, and I'll trade it down to 142. It gets down to 140, I'll buy it again, buy it up to 142. And they're trying to play those oscillations. The trend traders, they're looking for the moves. They're saying, you know what, I want to find the move. That's how I'm going to go out and make money, right? Well, whichever way you're looking at it and whatever time period you're looking at, if you can apply an average true range to your signal, it can give you a pretty good clue as to whether that signal is more likely to be effective or not. So let's go do it. I'm going to come down here. I'm going to add what's called the ATR, or average true range. And the default parameter on it is 14. So 14 bars, 14 candles in my case here. Okay. And what did it say? Well, it says 2.577. What the heck does that mean? Well, what it means is that the average range on the stock over the past 14 days is $2.57, right? $2.57. Notice when the stock is trending, okay, I mean, you can even look at Apple the last 2 days, the average true range is rising, okay? It's almost always the case. When the stock is trending, we almost always see the average true range rise, okay? It's not always the case, and in fact, in 2017, we've seen a lot more exceptions to that than what we will typically see. But we can even see one right back here, November, December, January, right? The average true range is actually on the decline, even though the stock is on the rise here, okay? But what does this mean? Well, what this means is that at 257, if we look at Apple and we say, well, Apple has not moved $2.57 in the last several days, what kind of condition is it in? Is it in a trending mode, or is it in an oscillation mode? Is it more likely to just kind of have a little bit of move, or more likely to have a bigger move? Right? This comes into play when trying to determine when to get out, right? Or how much reward you can expect, or even when to say, you know what, I'm wrong. Enough is enough. What happens is when you start to get a stock, and in fact, Apple triggered on one of our algorithms, it triggered bullish on Friday. And it typically isn't going to trigger bullish on such a big move, okay? But in the case of Apple, it did, right? Now, what happened? Well, Apple was up how much? Okay, it was up from what, 157 here up to about 162, up around $5. I mean, that was a pretty monster day here for Apple. Most people, do I really want to chase Apple? Do I really want to trade it higher? Our natural instincts are no. Why? Because, what if it comes back, right? But what did Apple do? Well, Apple traded outside of its average true range. Okay, its 14-day average true range was around 2.4. And it traded outside of that, not in the last 2 days, not in the last 3 days, but just in that day. Made what I refer to as an outsized move. Okay, Now, that doesn't mean that Apple's going to definitely have follow through and definitely continue higher, but it is a piece that goes into the algorithm that says, hey, you know what? This is a bull signal. This is an entry signal. Okay, so it is one of those pieces and one of the really nice filters that helps to distinguish whether a signal is, hey, you know what? We just have a chance of going up a little bit, and a signal that has a chance to have a really major run on it. Okay, let me give you some examples. And Apple, if you go into TM signals and you look at the history on Apple, the signals have been fantastic. And this average true range is what allows for that. When a signal comes into play on the algorithm and the average true range in the stock is not really moving outside of its average true range, it doesn't trigger as a signal. Because what is that signifying? It's signifying more consolidation. And with this particular algorithm, we're looking for a trend. We're looking for a big move. We're not looking for, ooh, this stock went up $1 tomorrow. Who cares, right? Who cares? Fine. $1 down, $1 up. At that point, you're playing the news. You're playing the emotions. You're playing what's the market doing. You're playing, what does Donald Trump tweet, right? When you're playing with a stock where the price action's moving outside of its average true range, your probability of riding a trend increases tremendously. The Katie algorithm, we have two algorithms or three, but two that are stock signal algorithms. They both look for trends. They're not looking for oscillation and, we're just looking for the stock to go up $1 or $2. No, they're looking for big trends. And so this ATR really comes into play. And no matter what it is, it needs to have an outsized move. Let's take a look at First Solar. First Solar last week triggered on our Trend Rider algorithm. Okay. And it triggered right here. Now, notice what has happened, okay? Notice what has happened. If you look, what was the average true range when it happened? $1.40, right? It was $1.40 on the average true range. How much had First Solar moved up into this signal? Well, it had moved from 46 up to 48.80. So it had moved about 280. Even though it was in a consolidation, it was fairly flat. It wasn't really going anywhere. Within the prior 3 days, it had moved 2 times its average true range. What does that tell you? What does that signify? Well, that signifies that, hey, this stock has a chance of going on a serious trend. The trend element is highly elevated. And whether you're playing stock, whether you're playing options, no matter how you trade it, right? If you have a chance of a strong trend, the odds of making money are going to be significantly greater in your favor. Now, did it go up the next day? Did it go down the day after and up the next day? Yeah, I mean, there's some oscillation there. But what didn't it do? It didn't start to move outside of its average true range. And so what did that tell the algorithm? It told the algorithm, hey, nothing's really changed here. Yes, it hasn't broken, but there's going to be pause and, rest days and everything else there. And, typically we don't see a lot of signals ahead of earnings. In this case, we did. We saw it ahead of earnings. Earnings obviously helped it to have the bounce, and it's amazing how accurate the Trend Rider signal is ahead of earnings on various stocks. With the Katie algorithm, we saw NVIDIA trigger not too long ago. Okay, here's NVIDIA triggers on September 29th. All right, so September 29th, so right in here. Okay, in fact, it was on this gap day that it triggered bullish. How much is the stock up since? I mean, the stock's up what? From 178 up to 204, okay, or 203.84, right? finds a trend. Well, let's take a look at the average true range. What was the average true range here? $5. Okay. Within the last 5 days, had the stock moved $5? Yeah. I mean, here's the stock right here at 178. I mean, it was 170 4 days prior. So while it doesn't look like a huge move, it was outside of its average true range over that prior 3, 4, 5 day period. Now, you could choose 3 day, 4 day, 5 day, however many you're looking back on. The algorithm actually, uses different numbers for different stocks because different stocks have different tendencies. But it uses this ATR to say, hey, you know what? The chance of a trend is significantly greater, right? Now, I played this 2 ways. I played this with some stock, okay, that I'm still holding, and I played it with some options. Now, my options, what did they do? Nothing. After a week, I got bored. I said, enough's enough. I'm out of here. I'm going to go find something else that's moving. Well, all right, I got out of my options, and boom, they helped my stock a lot. But two different things. The algorithm itself never exited. In fact, the algorithm itself is still still riding strong, and still riding that trend. This also helps on the downside, meaning, you know what, the average true range is saying, hey, this signal isn't working. It's just not happening here, okay? And let me see if I can zoom this in just a little bit. I'll come in and just take this chart to a 3-month chart. Let me make it just a little bit larger here. All right, so on October 25th, CSX triggered bullish. Okay, it gave a bullish signal on Katie. Okay, great, nice. But in this case, it's not pulling a First Solar. It's not pulling a Apple. It's not pulling an Nvidia. It's doing what? Now, there's some news things that came into this that jumped in that said, hey, you know what? The news is bad, and they basically canceled their investor day, and so we saw some heavy sell action. But what did the algorithm do? Well, we start moving outside of the average true range, right? And this day here, we go from 54.40 down to 53. That's a $1.50 move. Well, the average true range is $1.15. So we start to see a move outside of that average true range. What's it telling us? Hey, wait a minute. This bull signal, we may still go higher, fine. But the odds not in our favor. This is now moving in an outsized way. This isn't just some, small little pullback like right here where, okay, you know what, it's within the relative ranges, probably something going on in the market, just some typical oscillation. No, something's going on with CSX. Something's wrong here. Moving on an outsized basis. And so that ATR, or the stock moving beyond that ATR element, can also help to say, hey, look, you know what, you were looking for an upward trend? You know what, there's an increased chance of a downward trend. And so you probably ought to look for another entry point. And with the Katie algorithm at TM Signals, that's what it does. It uses the closing price. It says, hey, you know what? It's outside of that average true range. All right, you know what? Odds have changed. We're out of here. We'll take a loss and move on. Okay. And so this average true range, no matter what your other signal parameters are, whether you're using MACDs or sophisticated algorithms, whether you're using, very simple candlestick patterns, applying that average true range and understanding that when a stock is trading in a trend, that stock needs to make a move outside of that average true range for a trend really to emerge, it's going to give you a really nice screener, a really nice way to say, you know what, yeah, this signal, this has a good chance of making money, and this signal, it really doesn't. This really comes down to applying options or stock trades to each and every signal, and is something that here at TM Signals we will take a look at on a weekly basis starting this Thursday. We will have about a 35 to 45 minute video every single week where we look at the signals, we take this ATR, and we talk about the option or stock application to those individual signals. Now, every signal out there, no matter what you're using, whether you're using, the KD algorithm or the Trend Rider algorithm, or your own signal, whether you're assessing all the signals that are out there in the market, I don't know about you, but every day I get emailed about, hey, you know what, buy this stock, sell this stock. There's all kinds of, hey, buy here, sell here, right? But when I look and I evaluate a signal, it needs a couple things. There are some bare necessities here that just have to be in there in order to take advantage of that signal. Number one, we need simplicity in pricing. Okay, simplicity in pricing, meaning there is time to enter and exit. If it is based on 1 penny and the stock ticking above that 1 penny or below that 1 penny, am I really going to catch that penny? Is that realistic? No, it absolutely is not. Unless I'm day trading, unless I'm sitting in front of my computer and I am just keenly focused or have some sort of auto trade set up, that's not really simple. There needs to be some time to enter and to exit, especially for those that have, day jobs that aren't sitting in front of their computer all day and still want to take advantage of signals. Simplicity in pricing is a very big thing. It's not exactly an easy thing to create, but it is a huge thing when it comes to creating signals. Also, when dealing with signals, there needs to be that ATR concept application to understand trend or oscillation. And if you're looking for a trend when the stock is still inside of its average true range, the chances of that trend emerging are very slim. And if you're looking for a pullback or some sort of oscillation, right? You see Apple on Friday and say, I'm going to bet it's going to go down, right? After it had a real big update. Well, it's way outside of its ATR. Chances of you being right and playing for some sort of snapback or some sort of consolidation, the odds aren't in your favor. So a simple application of that ATR, allows us to say, hey, you know what? Can we put these odds in our favor? The other thing that signals need is all signals need to have exits. There is nothing worse than, as a trader, getting an alert saying there's a buy signal and just sitting there and going, okay, now what? Now what? Now what do I do? Because what happens? Well, you weren't following that stock before, right? In the GM example. Now you're staring at everything. Oh, man, this stock just jumped 10 cents. Oh, it just pulled back 15 cents. What does that mean? Right? All those things naturally start to come into play no matter who we are. It's all of a sudden, well, we got in, so now our stock needs to just have all upticks. Can't have any downticks, has to have all upticks, and we create unrealistic expectations. So signals need to have some sort of exit parameter in those to be traded effectively and to dissuade some of the human element that tends to come in. Okay. The fourth thing here is there needs to be a focus on gain-loss and not win versus loss. A winning trade and having a high win ratio does not always equal profit. And a lot of signals out there and a lot of what people are looking for is they're saying, you know what, I want to be right all the time. I want to be right. If I'm right, I'm right, I'm right. Then, then they're sitting there and saying, hey, I'm going to be good to go. But that's not always the case. And in fact, if you go look at TM Signals results, in many cases, there are months where there are more losses than winners, but the gains far exceed the losses. And I don't know about you, but from a trading standpoint, yes, wins always feel good, but gains feel way better. Now, gains feel significantly better there. And so any signal needs to have a focus on gain versus loss, not win versus loss. some of these things like, well, you know what, I get in, and, well, if it's in the green and then goes red, I just automatically get out. Okay, great, that sounds good. That makes us feel warm and fuzzy inside, right? But is that really profitable? Is that really realistic? Because now we're saying, well, because I'm in, this stock has to do A, B, and C. Well, no, the stock's not going to care that you got in. It's impartial to what your price was. It doesn't care. That's arbitrary. Okay? And so what isn't arbitrary? Well, the probability of the next trend, right? That's not arbitrary. And with the probability of the next trend, yeah, there may be a little whipsaw here and there, but knowing when those whipsaws are, holdable and when they're, hey, let's pull on out and move on, that is focusing gain versus loss rather than win versus loss. Next thing a signal needs is a limitation on outthinking a signal. What do I mean by this, right? Well, go back to our example, right? General Motors. Well, now you get into General Motors, and now you're looking at the news and this and that, and, oh, there's an upgrade and there's a downgrade, right? Well, wait a minute. Wait. You got in for the simplicity of a signal. Let the signal go. There needs to be some sort of limitation on outthinking that signal. The other thing that makes the difference when it comes to trading signals, a lot of people try to take a signal and mass apply it. Okay? They say, well, I'm going to create a little signal system, and when the MACD does this, and the stochastics does this, and the RSI does this, and they all do the same thing at the same time, then it's bullish or then it's bearish. And they try to apply it to Apple and Amazon and General Motors and Ford and Boeing and every other stock that's out there. And they set up this scan, and they scan for all the stocks that are making their signals that day. And what happens? Well, day one, they don't get anything. Day two, they don't get anything. Day three, they get a couple stocks they've never heard of. And then day four, they get 50 stocks. Now what? Right? Now what? Am I going to trade all 50 of them? No. The reality is each stock out there has its own, beats to its own drum, has its own trade rhythm, has its own movement, has its own nature to it. And when you're looking at stock signals out there in the market, or signals that people are trying to sell you, take a look. Is this something that is being mass applied to all stocks out there in the market? Or is this something that's being applied to very specific stocks and in a very customized and specific way? You'll find that the ones that are, that are more customized and very specific there, that those stocks tend to perform better, or those signals tend to perform better. The bottom line, it just needs to be profitable, right? Yeah, great, feel good, win versus loss, but it needs to be profitable when it comes down to trading signals. Now, I mentioned that, early on that TM Signals is in the process of putting together a new signal. Now, it needs a better name. I just call it the Voodoo Stoke. It needs a better name. Those of you who've heard me talk about this in the past, I've talked about it on Trader Minute a few times. But, we're working on putting this into, a programmable, repeatable signal that can actually be traded here on TM Signals. And it's stochastic based and very good results. I don't know that it's very logical. But let me go show it to you here. And sorry, I thought I had my notes in front of me on the stocks I was going to show. Let me grab that here. There we go. But let's come in here and let's go back to our charts. And this is a very simple application here. Okay, and we think about trend versus consolidation, the ATR. Katie and Trend Rider, the two algorithms we have on TM Signals now, they're both looking for trends. This stochastics is looking for oscillation. And so what we're going to be looking for is that the stock is moving within the average true range, that it's not having some sort of really outsized move. But what we're looking for is something very simple, and it's just one indicator, okay? And it's not something that happens very often. In fact, here's Apple. I'll show it to you with Apple. It's only happened one time this year. But the alluring thing with it is the fact that it is so accurate. Okay, it is incredibly accurate. And so let me pull it up over a 1-year basis. And we have the slow stochastics here down below. Now, the stochastics, all it's doing is telling us whether the stock price is high or low relative to its 14-day average. Think about that for a second. Is the stock high or low relative to its 14-day moving average? Okay, I don't need some fancy indicator to tell me that, right? I mean, all I need to do is look at the stock. Yes, right here, Apple is high relative to where it's been over the last 14 days. Pretty obvious, pretty clear. But something happens. And it's not right back here. Here's the stochastics, and I'm just looking at the black line right now. In fact, let's get rid of the red line. Who cares? Who cares about the red line? Let's just use the black one here. Okay. This is what the black line is referred to as is what is referred to as the percent K. The red line is the percent D, which is just the 3-day moving average of the percent K. So it's just a smoothing line. Okay. So if we come in here, let's just take a look up top here. Are there any days where Apple came and hit the 80 level and then just dropped? No. Most days, nothing. Almost. Pretty close, right? Pretty close. What happened to the stock? Okay, some downside, but not quite there. Close. What did it do right back here? On the 20 line. It's the only time of the year that Apple came and the stochastics came to 20 and bounced up. What happened to the stock? Now, there was nothing in this indication to say, hey, you know what, this stock's going to now go on a trend. But there was in this indication sign that says, hey, here we are. We're ready for a bounce. And there was a $4 bounce within the next 3 days. Let's go take a look at another one. Let's take a look at Boeing. Any days throughout the year where it either came up and hit 80 and dropped exactly, or hit 20 and rallied exactly. Right here it broke 20. Who cares? But right here it came right to 20. Take a look at this. The low end of the oscillation range. What do you think the average true range is going to look like? Yeah, the average true range. This stock hasn't traded outside that average true range. Here we are on the low side of that. And what do we get? Bounce. Right? Now, this doesn't suggest that it's going to go on this real nice trend afterwards, but to play that from 232 up to 240, nice little oscillation there. Absolutely. When you look, whether it be Facebook, whether it be Boeing, this is something that just doesn't happen very often for each and every stock. But when it happens, it's almost always something that sees continual run-up. Now, for years, this is something I was shown many, many years ago. And for years, I've tried to figure out, now, why does this work? Why does it work? What's going on here logically? And I've looked at the calculations, the mathematics of it. There's no reason why this should work. There's no logic, and that's why on that slide I put logical question mark. There's no logic. But the reality is, when we go back and we look at stock after stock after stock, whether it be Facebook, whether it be ETFs like gold. All right, here's gold, and what did it have? Boom, hits 80 and down, right? Never did it the rest of has only done it once this year, and has never done it on the upside here just yet, right? Again, this isn't going to predict the direction all the time, but when it happens, it's incredibly accurate. In fact, as we continue to build the baskets of stocks, we're seeing this accurate at over a 90% clip. So the question is this now tradable? And the reality is this is an end of day type of thing, and so it is very tradable, especially looking for an oscillation. And if you take a look, I mean, you can go and find these yourself. You take a look. Let's go to Intel, because Intel actually had one that didn't work, and so let's go take a look at it. But here's Intel, down to 20. Nice bounce here, right? We came down to 20 right here, and not the excuse me, yes, same bounce there. Where's the one that didn't work? Right here. Okay, right here, some downside next 3 days. It's pretty much trading higher, but ultimately did have a little bit of pullback there. So it's not 100%. Nothing ever is. But no matter which stock you're using, and there's not a lot of algorithms or trade signals that I think apply very well across the board. In fact, most of them, I think they have to be tailored to that individual stock. This is one of those that you will see in the coming months on TM Signals. And in fact, starting next week, we will publish any new ones that come out. But here's Nike, and it doesn't make any sense on this day. And the news is bad and all of that. But ultimately gets a bounce right back up into its range. And you'll see these signals published in there. But take a look at those. It's an incredibly simple algorithm. It's not one that there's a whole lot of steps in. It's two things. It's the stochastics and the average true range. And you know what? Even then, the average true range, it basically tells me what to expect out of the trade going forward, not necessarily whether the trade signal is going to work or not. So if you have a great name for it, the Voodoo Stochastics is pretty much what I've called it. But anyway, and so we go back to, all right, here at TM Signals, we have different trade signals. We have the Katie signals, the Trendrider signals, and the results obviously speak for themselves. And we're going to be adding the Voodoo Stochastics. And we talked about what is needed to make a technical system or technical triggers useful and tradable. Number one, simplicity in it, right? And there being time to exit and enter. Well, Trader Minute signals are based off an end-of-day pricing. The signals are known an hour before. There's a good hour, and heck, even when I trade some of them, I'm waiting the next day or 2 days, just because I want to get a different price, right? So there's plenty of time to exit and enter. This isn't something where you have to be tied, to your computer. The ATR concept is applied in each and every one of these signals. And more than that, all signals have exits, and the ATR concept really comes into play with these exits. The focus is on gain versus loss, not win versus loss. There will be months where there are fewer wins than losses. Last month, we had more losses than wins, but still had more gains than losses. And if that's what our bad months are, or more gains than losses, we'll take it, because when there are more wins than losses, it means the gains are generally really, really good. There are no humans to outthink it. Everything's very automated with it. And then each signal's customized to each stock. But if you haven't had a chance to use the TM signals or go take a look at the results, the reality is they continue to be profitable no matter what the market is doing, no matter how it's trading, no matter how it's moving, or I guess in the market of late, how it is not moving. Now, one of the biggest requests that we get here at TM Signals is, how do I apply my trades to the signals, right? Every day the signals go out, they're posted, they're on TM Signals. But okay, how do you apply, what option do I buy? Do I buy a spread? Do I buy do I buy stock? How much money do I put into it if my portfolio is this size or that size? Now, these are the common questions that, we continue to get when going and applying the signals. starting Thursday, we will have a weekly 30-minute conversation where we look at the signals that are in play right now on TM signals, whether they be KD signal, trend rider signals, even the market vibe, and talk about the trade application. What is the trade application to these signals? And whether you're a stock trader, whether you're a spread trader, whether you're a long options or a premium seller of options, we will talk about the ways to apply the risk, to apply trades to these signals to get solid risk rewards and to be able to take advantage of the gain versus loss side on these individual signals. Now, this will be going on here for the next 4 weeks, starting on Thursday, here. Now, in this time, and I mentioned I would, at the end of all of this, I would give you an offer, and we're doing something that we have not done before with TM Signals. The cost on TM Signals is $249 a month. We have not opened it up to yearly memberships here just yet, but we are opening it up this week here for yearly memberships at a 40% discount. And with those, with that 40% discount, you do get access to the new stochastic signals, as well as the trade application sessions that will be running through the month of November. To jump on board, to sign up, all you have to do is come in, hit register now. It'll take you right there to it. A very simple checkout page. Look, if you sign up and you get in, and after a week you're not happy, all you have to do is send in something to support and say, hey, you know what? Signed up for a yearly. I don't think this is right for me, and no questions asked. Money back there. So you do have a week to come in, evaluate it, see for yourself. You can evaluate the performance of these signals without having to even sign up. Just come right to the front page, click the performance report. You can go back through the months and see how the performances have been, on where they stack up, and see for yourself if you're able to use these signals to go out there and make some great money here in the market. The signals are proven. The signals are very accurate. They are focused on profit, not win versus loss. And as we go forward through the month of November, we will talk about applying the options there to it. Look forward to having you on. If you do have any questions, shoot them over to support@tmsignals.com. Thanks for spending some of your afternoon here with us. Have yourselves a great evening, and we will talk to you later. Take care.